Sorry. The question was rate growth. If you look at rate growth on an inflation-adjusted basis.
Yeah, it's negative if I look at the numbers correct.
Well, it depends on when you index it. So if you take the 1987, which is the year we started tracking data in the U.S., if you take the 1987 number and take the inflation-adjusted rate out to where we are today, we actually have caught up and we're about even. So it would not be negative growth in terms of rate. But if you take the 2000 rate ADR and adjusted it for inflation, we would still be about $3 to $4 below where we should be today.
And then how about from 07?
We would still be below. I think it's not quite as big as 2000. I think it's probably a $2 gap, about, if my memory serves me correctly. But it would be. We haven't reached that inflation adjusted level that we should be.
And for Hawaii, Oahu finally started having real rate growth. For Oahu has seen real rate growth starting this year. Maui is getting pretty close. The other two islands are still behind. Now, one of the things that we saw had got a lot of publicity were the high percentage increases of the rate over the last few years. But keep in mind, from the slide that I saw earlier, that we had a tremendous amount of discounting. So a lot of that double-digit growth wasn't so much growth as it was rate recovery. I think people need to understand that as well. Okay. Other questions? I have one for Mark. Mark, retail has been always been a big fabric of our industry. We've seen a little bit of decline in spending by consumers, and so I was wondering what your thoughts are that might be attributed to that. And then a secondary question is, have there been changes in terms of tenanting, types of tenants we're seeing coming into particular areas?
The first part of your question is on? Okay. First part of your question, the decline in sales of the tenants, recently, you're talking about the last 90 days, 120 days, is a little more so in the high end. So it's coming from super high luxury, lofty numbers, not even down to reality or comparable to other cities. In the neighbor island resorts, as far as tenanting, it definitely has. The resorts tend to have peaks and valleys, and Joe's the first one to say that Oahu's first one out of the trough and the last one going down. Conversely, the neighbor islands are first ones going down. So what it's done is it's affected rates. So if you looked at a trend of retail rates at a shopping center in Kaanapali, you would see in 2005 or 2006, they probably averaged $5 a square foot per month. And if you looked in the bottom of the trough here, it was probably half of that. And in Kailua Kona, you would see that too, where retail rates took a big hit. So it's not as easy being a landlord in those resorts as it is here in Te Waikiki.
When we talk about other competitive resort markets, you did mention Mexico and the Caribbean, but as far as other cities, gateway cities in the U.S. such as Orlando or Anaheim, how dynamic have those markets been? Have they recovered as fast as Hawaii? Where do you see some of the trends?
I would say they have not. Look, and I don't have Orlando data in my head immediately. The U.S. number I had there was the luxury markets in the U.S. So we were looking at other luxury properties in the U.S. Mainland versus Hawaii, and Hawaii has far and above done much better in terms of recovery. And what I know about the other markets, like Orlando specifically, the group business has hurt that market. And when looking at Orlando compared to Hawaii, Hawaii's done a great job in maintaining those rates and getting the rates back to the prior peak that we had seen in transient and group. And Orlando has not done that in terms of the group business. Most markets that I look at in the U.S. Mainland are not driving group rate. So the group rates are still really suppressed. And the transient rates are not back to prior peaks in a lot of those big markets either. So Hawaii, I was pleasantly surprised. I didn't expect to see that in Hawaii, just not knowing the market when I started to pull the data and look at it. They've done a very good job.
Other questions?
Joe, you referred to the increase in costs for these properties in Hawaii. Is there any comparable data on the mainland with Smith Travel Research, and are we typical or not?
Yes, and I will talk anecdotally. I can go back and pull the data and look at it. I did not do that before I came, but I know in the U.S. mainland, we've just looked at the P&L data for the last year, and across the board, hotel properties are experiencing the same type of cost increases in those expenses that we saw for Hawaii. So while we talk about a lot of increase in room revenue, the expenses have also increased dramatically for hotels across the board compared to where we were in 2000 or even 2006.
I know you were looking at the historical data and concerned that maybe Hawaii, particularly Oahu, is nearing its peak and that we may see a turn. I'm curious what are the indicators that you're using besides just looking at historical trends? Are there other factors in the local economy or demand that you patterns that you're seeing that have you concerned that the market will turn downward?
We're concerned about the market just going close to this peak. Are we seeing some uncertainties in the market nationally in terms of consumer confidence and so forth? When I've been doing my forecast and looking at the future, one of the key things that I look at is consumer confidence, where that's going. There's been some heading before. And then we look at some of what one of our economists, Paul Rubiger, says are the black swans. Well, now is the government shutdown a black swan? How much is that going to impact us? I think also we're at, it's hard to run a destination at 85% occupancy day in and day out and keep that quality of experience. So I think there's going to probably be a little bit of a natural shift going out to the outer islands. But also, if you recall, when looking at some of the data, we had the highest rates. But then also, when you look at places like Mexico or like the Caribbean or some of these other sun island destinations, they have a little bit of a lower pricing structure than we do. And you look at the occupancy rates, and they have a little bit of capacity than we do. The question really is, at some point, do we start to fall short of that value proposition, not only for the hotel component cost of it, but everything that comes with Hawaii, the air travel, the air cost, the air time travel cost, and all the experiences that you want to have in the destination. I think as the lodging component cost starts to rise, the importance of the overall value trip to an individual becomes that much more important. And so we do have a lot of competitors that are trying to get into our market as well. So but from an economic standpoint, are we starting to head close to a cycle or a softening of the cycle? I think we're starting to hear some rumblings of that. So it's more of not a predictive issue, but more kind of an anecdotal issue that we're not prepared for, whether it's a soft correction or if there's going to be a black swan that's going to be more exacerbated.
Yeah, Joe, I would add, I think looking at the data, it's the demand. So while we've seen incredible increases in demand for Hawaii and for the U.S., when you look at the Hawaii data, demand growth is trailing where you were last year. So for the next year, while you don't have supply to worry about, I think the question where will you drive new demand from? So, those issues of air travel and the cost, and those things come into play in terms of looking for new demand generators.
And by no means did I want to imply that I'm a very big optimist and a very strong supporter of where our market's going. But obviously, we have to look at reality and where are we on this cycle of this latest expansion cycle, and how long is that going to last? And it's really, the jury's still out on it. But we are starting to hear some concerns being expressed in the industry. there. Right.
Joe, don't you really have to kind of separate within Hawaii, Waikiki and the neighbor islands? I mean, Waikiki clearly is driving both demand and EDR, but there still seems to be some room, I would think, for the neighbor islands to continue to move up a little more in demand and in EDR.
Yeah, I mean, if you look at past cycles, in reality, this is the same pattern we've seen before. That Oahu recovers first. We get to about a mid-80% level with some highest escalations in pricing, and then we begin to see that shifting going over to Maui, and then secondarily to Hawaii with Big Island benefit, coming in last. In reality, on the occupancy side of our forecast, that's the same forecast that I gave out 3 years ago. It really hasn't changed, because we were looking at Big Island to strengthen their recovery in 2014. So yeah, I think that's true. The interesting thing about Big Island, I think sometimes, in some respects, it's self-inflicted, because if you look at some of the infrastructure on the Big Island, we've seen a lack of renovation in many of the resorts there. But yet we do have capacity, and the pricing increases in rooms hasn't really materialized. But I think that's somewhat reflective of the low arrival numbers and the lack of renovation that could probably spark a little bit more stronger marketing demand if we had a better renovated product. But property specific in the Big Island, some are doing very well, obviously. Any other questions? Okay, well, thank you again for attending this 20th anniversary. My name's Sue Manager Mark, and also thank you all for your support. See you next year.